Good evening, everyone. How's everybody doing today? My name is Lawrence Laddie, also known as Mr. International. Welcome to Financial Independence through Small Multifamily Investing. Tonight, our guest is Lee Johnson. He's going to discuss with us and show us how to be a passive investor and grow your income to become financially independent. But before we do that, we're going to do what we always do. We're going to go around the screen. I'm going to ask you, please introduce yourself, 30-second introduction, right? So we're going to start to my left, your right. We're going to start with Tanessa Wilson. Hey, Tanessa.
Hello, awesome to be first. Again, my name is Tanessa Wilson, and I am from Columbia, South Carolina, so that's my market. I am a newbie within the commercial multifamily space, and I also have interest in self-storage. Glad to be here.
Oh, thank you for coming. Great seeing you. Next, we have Delcy. Hey, Delcy. You're muted. I don't hear you, Delcy.
Hold on. Hi, my name is Delcy Cunningham, and I hail from New York City. I've dabbled a little bit in real estate, in the mortgage industry. I'm not fully versed on all the topics that we have here, but I thoroughly enjoy them, and I enjoy learning. So that's what brings me to this platform.
Well, welcome.
Thank you.
Thanks for coming. Next, we have Shylon.
Hi, everyone. My name is Charlene Brown. I'm in the Richmond, Virginia area. I have done one investment property, working on my second. So I'm definitely a newbie, wanting to get more information, learn more, absorb everything that I can about the industry, and build an empire for myself, ultimately, so I can leave corporate America.
Mm-hmm.
Oh, congratulations on your investment property, your upcoming investment. Thank you for coming.
Thank you.
Crystal Howell. Hey, Crystal.
Hey, how are you?
I'm doing great. And you?
I'm doing good. Thank you.
Introduce yourself. 30 seconds.
Oh, so sorry. Crystal Howell. I'm sorry. Crystal Howell, Richmond, Virginia, mortgage lender, residential mortgage lender for the past 20 years. And I've dabbled in bought and sold properties over the last few years. So here to help.
Great. Well, thank you for coming. Good to hear your voice. Good to see you. Maybe you can talk to Shaylon. I don't know if you know Shaylon Brown. She's from Richmond too.
Oh, okay. Hi, Shaylon.
Hi, Crystal.
Next, Paula Ward. Hey, Paula.
Hello, how is everyone this evening?
Yeah, doing great.
I'm in the Greensboro, North Carolina area. It's primarily the area I'm focusing on acquiring real estate, but I am open to other areas of the country. And I'm interested in single family, multifamily investing.
Well, welcome. Good seeing you again. Thank you for coming.
Mm-hmm.
Jerome Myers.
Hey, Jerome Myers, Greensboro, North Carolina. I'm a new investor looking to learn more about active and passive investing in multifamily.
Well, welcome. Thanks for coming. Good to hear your voice. Good to see you. Persephone, do you want to talk tonight? Introduce yourself. Persephone is very quiet. Okay. Persephone said, okay, oh, that's Persephone. Okay. I'm 20, just looking to learn. That's Persephone. Okay. Well, welcome, Persephone. Thank you for coming. Now, once again, my name is Lawrence Laddie, Mr. International. My guest tonight, Lee Johnson. Lee Johnson has been investing passively in, I think it was 15 plus deals right now. We talk a lot about passive investing, right? He's also looking to become an active investor, right? In the deal, become a general partner, GP, right? But we're gonna keep it on a first grade level tonight. so everybody can understand, right? Lee, thank you for taking time for your family, because you got a 4-year-old and a 14-year-old, right?
No, she's 8, but going on 28.
Oh, okay. That's normal that's par for the course, right? And taking time for your wife and your family this evening. Appreciate you coming on tonight. Lee, take it away.
Thank you for having me, and thanks to everyone for joining us this evening. We're not going to have PowerPoint like death by power. So what we're going to do is we're going to go into presentation mode, but for the most part, what I'm going to try to do is have an interactive conversation with you all here this evening, right? Because the system that I'm going to share with you all is the system that I've implemented for myself. And I believe that, hey, if I can do it, anyone can do it just the same, as long as you are open to being taught how to do it. So give me 1 second here, because some reason it's, all right, let's go back. There we go. So my wife and I, we reside in northern. Go on mute.
30 minutes more loose.
Maddie, you can see who's not on mute.
I got it. Go ahead.
All right, thank you. My wife and I, we run a small private equity investment firm in Northern Virginia. However, we have invested in a number of deals throughout the United States. Right now, our focus, after having completed a number of flips, we probably completed about teens, 20s flips. However, we got out of the flipping business and went into the wholesaling business. We still have our wholesaling business that's actively going, but as you guys know very well, over the last 1 or 2 years, wholesaling hasn't been much of a business, because guess what? If you had a bad property and you needed to sell it, you could just put it on the market and say it needs some TLC and somebody's going to give you an offer. However, in 2018, we were looking to make an investment in a multifamily dwelling, right? So we live in Northern Virginia, which is right outside of Washington, D.C. And in this particular area, right, to purchase a building, it's going to be very expensive. However, you know, some time has gone past and now we have 2 contracts out. We're investing final for one 50-unit portfolio in Alexandria, as well as another 53-unit in Virginia Beach. What I'm going to show you here is the system that I have implemented, and I think that this is a teachable solution, a teachable system that if you follow the same strategies that I followed, you can probably be where I am in a couple of years, similar. So who am I? I'm Lee Johnson. I'm the co-founder and vice president of Value Investment Partners, where all of our partners are VIPs. I'm responsible for implementing the strategies that we use to grow and help partners. I call all of my people who are in my tribe partners, right? And what we're doing here is to grow their wealth, right? Using various alternative investment strategies. We're going to introduce you guys to something called private banking. We're going to introduce you to something called Peer Street. We're going to introduce you into different ways that you can translate your 401k into a self-directed IRA. We're going to do all of that. But, you know, I'm going to give you a lot of information. And if you want to stop in the middle, I'm happy to stop and we can do a deep dive into that particular area. I bought my first property in 2000, which was a single family, well, a townhouse that I purchased. And in 2005, because that property I purchased for $139,000 in 2005, when I sold it for close to $400,000. And I started using the funds to invest, right? I did investments in Delaware, crashed and burned in 2018. But by 2009, 2010, I was back on my feet. I had some lessons learned, and you're going to see where I am today. So today we are invested at this point in time in 21 different syndications. Last month, we exited 3 different syndications, which gave us an equity multiple probably as low as 1.73 and as high as 1.98. And the 3 investments that we were in. Right now, the portfolio is about 2,800 units. I will be honest with you and say most of that is as an LP investor, right? But over the last year and a half, I've invested in 3 deals where I got access to the GP. And the GP is a general partner, right? And there's many different ways that you can get there. So I'm an active and a passive investor. And the approach that I bring to the table is that being an investor first, I'm always looking for opportunities that protect the investor versus protecting the sponsor, a syndicator, et cetera. If they perform their jobs very well, they will actually make out very well on the back end. So that's what we're going to go over. Let me get started into this. The question that I have, and if anyone wants to come off of, is why do you invest? Because out there you hear a lot of different stories as to why different people invest. Is anyone comfortable sharing, well, why is it that they are investing in real estate? We got a shy bunch today, huh?
I see. Well,
I
That's
guess
good,
I'll,
man.
go ahead.
somebody
Vanessa, you can go for me. I was gonna speak. Hey, everybody. Hey, happy Tuesday.
So, Tanessa, what you about to
Oh.
say?
Oh, yes. So the reason that I chose to invest in real estate is because, number one, I feel like I know it's risky, but compared to, other types of investments that are out there, definitely I can see my money growing. And also I want to build my real estate empire for my children. So they are my whys. I have 3. So yeah, they keep me motivated, and that's one of the reasons that I invest, to be able to spend more time with them and to have that financial and time freedom.
Love it. I love it. So when I ask that question, a lot of people have various different answers as to why they're investing in real estate. But if I was to categorize many of the different reasons why people invest in real estate, it's because they're looking for one or multiple of the 5 freedoms, right? And the 5 freedoms, in case you don't know them, is time freedom, location freedom. Location freedom says that I can be wherever I want to be in this world because I don't have to worry about income. Financial freedom leads to location freedom because if you have different streams of income, right, you're not going to be locked in or tied to a desk or whatever that situation may be. You'll have financial freedom. The one that people don't talk about quite often is vitality freedom. And vitality freedom is when you're looking at your body, in your vessel, and you're saying that I'm doing all of the things that are necessary such that when I do achieve these freedoms, I can enjoy them. I'm not in the bed, I'm not ill, etc., but I'm taking care of my body, I'm exercising, right? I'm eating the right food so that as I achieve my freedoms, right, I'm healthy enough to enjoy them. But I believe that everything starts and stops with your mindset. As a matter of fact, you can see it up here. Mindset is everything. And to me, mindset breaks down into 2 different categories. You either have a fixed mindset that says what's come to me and due to me is all that I can, right? But if you have a growth mindset, your mindset says that anything that I perceive or can conceive to believe, right, is something that I can achieve. You guys probably know that from that book by Napoleon, right? But there is a drastic difference between being rich and having wealth, right? And you can make $100,000 a year. You can make $200,000 a year. You can make $500,000 a year. But if you spend it all, guess what? You're no better off than the person who makes minimum wage doing whatever it is that they do. Because at a blink of an eye, your world can be disrupted and you're in that hole. When you talk about wealth, right, there are different ways that you are using your monies in order to be able to grow wealth. And what I like to talk about is growing generational wealth. And growing generational wealth is wealth that lasts several different generations. So in order for wealth to last several different generations, it has to be taught and educated to the first generation, the second generation. Otherwise, you'll have a trust fund baby that basically goes out, spends the money on nefarious things, and that money will be gone within 1 or 2 generations. But if you're talking about building generational wealth, you're talking about the Carnegies of the world. You're talking about the Gates of the world. You're talking about the Bezos of the world. They have generational wealth that will last them many, many generations to come. Many people don't know this, but our banking system in the United States basically is a fractional reserves type of system, right? So for every $1 that you put in the bank are able to make loans that are 7 times that. And if you guys remember in 2008, when we had the financial collapse, right? Lehman Brothers were leveraged at 40 times what they had with the different Federal Reserve, right? So what I'm going to show you here tonight is your money always has to be working. And there are 3 different ways I'm going to show you how to do that tonight. I hope you find it valuable. And if we aren't able to answer your question this evening, right, then we'll park some time. You have different ways that you can contact me and we can go over it, right? So how do you make your money work for you, right? Which investment vehicles are you going to use? Let's start out with the first one, right? We live in a day and age where people aren't going to work 20, 30, 40 years with one company, right? The minimum usually to go into a multifamily syndication, any syndication, the buy-in is typically going to be about $25,000, but the average that I see is about $50,000. And the question that I often run into, or at least I used to run into, was I don't have $50,000, right? So what I did is I came up with a system using a plan that I've implemented for myself. Is, have you ever heard of a self-directed IRA? And another term for the self-directed IRA is an EQRP, Enhanced Qualified Retirement Plan. A lot of people aren't aware, but they can take the stranded 401ks. You can't do anything with the 401ks that are there with your current employer, right? So if you have a 401k where your current employer is matching, right, that's going to be locked off from you. But every 401k that you participated in before that, and before that, and before that, you can actually move those monies. Like you can move it into the 401k that's with your current employer. I would say that you don't want to do that because you're going to be limited in the number of options that you have. And I would direct you over to something called the self-directed IRA. It's even called an SDIRA for short, right? But what this does is it allows you to become the administrator of the direction for your retirement investment. A lot of people don't know that. So There are a number of companies that are out there. I'll show you a slide that has 4 or 5 different entities who you can reach out to, and they will help you to set up your self-directed IRA. Now, when you do have a self-directed IRA, you can invest in real estate, you can invest in commodities, you can invest in gold and silver, you can do hard money loans, or you can do tax liens, right? And certain states have tax liens where other states do not have tax liens. But what I wanted to share with you here is the fact that you have options, because it's always the case that we want to explore our options and go in a different direction that best suits us, right? So there is just one strict rule when it comes to self-directed IRAs, right? Follow proper setup processes and find out the tax implications, right? Because if you are investing using pre-tax money, you have an advantage against someone who's using tax money, right? So there's something called UBIT and UDFI, where because you've used pre-tax money, there is a tax obligation that will hit you, right, when you're investing this way. But if you were to do a dollar for dollar scenario, I believe that you can actually get a higher compound return on your money by going with a self-directed IRA, right, versus using a standard 401k and having to invest in mutual funds, right? So, go ahead. Laddie, do we have anything out there? All right, I'll keep moving. When it comes to a self-directed IRA, there are prohibited transactions. You can't invest in arts, right? You want to try to avoid general partnerships and S corporations, but you can invest into LLCs, right? You want to avoid private companies that employ you or your spouse and purchases things like antiques or taxes and things of that sort. You want to avoid those things. And I say, because if they pierce into your self-directed IRA, there are taxes and penalties that are there. So I say you stay away from those third rails, stay in the middle lane, play this game well, and you'll be able to grow your retirement very efficiently. But this is one of the options that people can actually use in order to invest in a syndication. And there are all kinds of syndications. There's syndications from new developments to value add syndications. There are syndications in purchasing car washes I've seen, right? Self-storage is a big play that's out there right now. And I'm seeing many people invest in the different syndications around self-storage. But this is one option that is there and available to you. If you have any questions at the end of the presentation, you'll have my contact details and I can dig into this just a little bit more with you. But one of the things that I wanted to share with you, and I am not compensated in any way from making a recommendation to these companies, which I'm not going to do here tonight, but there is several names, because as you do self-directed IRA, you're probably going to find about 1 million different results that come back to you. But some of the names that have been proven in the industry are Entrust Group, Equity Trust Group, My Solo 401k, Broad Financial, and UDirect Services. Personally, I am with Broad Financial, and I opened up my self-directed IRA with them in 2016. So when it comes to the self-directed IRA, I have two questions one question that I ask any person when they come to me as to how should they set up their self-directed IRA. And as you can see at the bottom over here, there's something called a checkbook control. When you have checkbook control over the IRA, you basically have access to the bank account to move monies in, to move monies out under your own volition. You don't have to ask anybody for this, that, or the other. You are the administrator for the investments that you move into. So the question that I ask is, do you trust yourself that you will not tap into these monies if there is some type of hardship that comes up? If you trust yourself that you won't tap into this money, I would say go with this checkbook control IRA all day, every day. However, if you don't trust yourself so much and you might be willing to put your hand into the cookie jar, I would say go with custodian control, whereby if you want to move into an investment or move out of an investment, you will have to fill out paperwork and get the custodian to basically look at the investment and make a decision for you as to whether or not if this investment will match the rules around what you can and cannot invest in, right? I personally like checkbook control. If I want to invest in any investment, I can do so tomorrow by writing a check, wiring money, etc. Right? So these are a couple of providers that are out there. Broad Financial is the one that I use, but if you search, you're going to find many companies that are out there. You have to do your own due diligence to make sure that you're investing with the correct one. However, once you have all of that set up, the model that I have personally employed is you take an IRA or 401k is the model that we're going to talk about here today, and you move that into a new self-directed IRA, right? What is going to be created is something called an IRA LLC, right? So you still have to have a custodian, which is going to be one of the companies that we mentioned before. There will be an IRA LLC, right? That will have an operating agreement which defines you as the sole owner, right? Once that IRA is set up, you will receive an EIN number. And at that point in time, you can go to any bank. You can go to a Bank of America. You can go to a local bank that is near you, and you will establish a business checking account, right? And once once you have opened up the IRA LLC, the bank account, your custodian will then either wire the money, mail you a check so that you can make a deposit into that IRA LLC, right? Then once the monies are there, right, you can move into real estate. You can purchase a single family resident outright, right? Because when it comes to an IRA LLC, you typically don't want to use any debt, especially that has recourse, because then you have to sign off on the loan, which you can't do because guess what? You do not own the IRA LLC, right? The IRA owns it, okay? But you could also move into private loans. So if you want to be a hard money lender, right, you can make a hard money loan against an asset. Or there are a number of other investments that are out there. I have cryptocurrency. I bought about 5,000 shares, $5,000 worth of crypto last July. I don't know where it is. It was one of those investments where I said, I'm just going to put some money into it and check on it in 10 years just to see where it is. I don't know where it is today, right? But I know crypto has basically gotten beat up of late. Was there a question out there?
I had a question, but you answered it.
I answered
You just answered it. Yeah, about the new IRA LLC. My question was, is that something that we would normally do if we were getting our own LLC? But you answered it when you talked about that you don't own the LLC.
Yeah. So when you, and thank you for Delcy for sharing that question. I'm sure others may have had it. When you work with, like if you work with Broad Financial, they have the attorneys, et cetera, there that will create the LLC. They will establish the articles of incorporation, and they will also create the operating agreement, right? Now, they aren't restricted to a state. So for instance, my LLC is in Wyoming, right? Wyoming has a super level of transparency so that it's very difficult to find out who is the actual owner of the LLC. And since this is a single member LLC, it's treated from a tax perspective as a sole proprietorship. If someone wanted to find out if I was the owner, if I had created it in Virginia, they would be able to do so very easily. So we went with Wyoming, but other states that have applicable laws similar would be Nevada, right? Utah, as well as Delaware, but a lot of people aren't using Delaware as much anymore, right? But you get to set it up with the company who's going to establish it for you, right? And at that point, once everything is set up, all you have to do is establish the bank account, get the money's wired over, and right after that, once the money is clear and available, you can start investing in other assets. All right. Okay, so we said, where do you invest, right? I want to pause to see if there are any other questions out there right now. This is something that I usually, when I do this presentation, I do it over several months because I'm giving people a lot of information. Basically, I'm doing a brain dump of what has happened over the last 4 to 5 years in an hour. So I know that this can be a lot of information to take in at one time. So I'm going to pause really quickly and just ask, where do you invest?
I can speak.
Go ahead.
We currently are investing in triple net lease. We have a couple of them, and also multifamily, and looking at possibly a rehab facility too with triple net lease.
Triple net lease, I love those because once you own it, you really don't have to do much, right? And you get to charge your tenants a CAM, right? And that's a great way to move out there. I know small retail has been getting hit pretty hard after COVID, et cetera. That's one of the reasons why I have stuck with value add. In particular, I haven't been doing opportunistic, right? So when you break down a multifamily syndication, there are several different buckets where you can put money into, right? There's core plus, there's value add, and opportunistic. Those are the 4 categories. So core is all of that, the brand new assets, right? That's the new stuff. It really it won't have any deferred maintenance, et cetera, because it's brand new, right? But as that property ages, it becomes a core plus, and there could be some deferred maintenance. When you look at value add, that's a property that's aged, and because it has aged, there's definitely going to be some deferred maintenance, but that's the opportunity for the investor, right? So if I look at the market rents and I compare that to the effective rents on an asset, if I see that there's an opportunity for me to do a renovation on the asset, I can increase the rents. And this is primarily the reason why I don't invest in single family anymore, and I only invest in multifamily, is because with single family, I'm tied to the market for how much I can charge to sell that property, right? Example, if I do a renovation in X neighborhood, right? When I go to sell that property, I'm going to have to look at the comps for that particular area. And even though I probably can list mine a little bit higher because it's been fully renovated, there's going to be a ceiling as to how much I can sell that property for. However, when it comes to commercial, and this could be in flex warehouse, this can be in almost anything, as long as I can increase the net operating income, I immediately, let me say that again, I immediately increase the value of the asset. So I have multiple different opportunities to increase the net operating income when it comes to commercial, because either I can raise the rents, or I can reduce the expenses, or I can do both. But once I do that, I can then multiply that by the cap rate, right? And all of a sudden I've increased the value. And literally I'm seeing people who are trying to sell an asset that they purchased last year for $3 and $4 million more than what they purchased it, and they did very little from a deferred maintenance perspective. But that's what you get in commercial versus what you can get in single family and residential at the same time. So thank you for sharing how you invest, right? But one of the ways that I want to show you is an opportunity where you can invest. And this is one of the strategies that I have for always keeping the money at work. There's a crowdfunding site called Pure Street, PeerStreet.com, PureStreet.com. So what happens is Pure Street allows for me, you remember we talked about you can do a hard money loan. What happens typically when you want to do a hard money loan is that you don't get first trust position, right? So you will be in a second or third trust position. If there was a foreclosure on the first trust position, right, all of the other trust positions that are higher than that can get wiped out, right? So you always, in a hard money situation, want to be in first trust, right? And depending on the area where you are, you may or you may not be able to get into first trust position. However, what I have found is this platform called Pure Street, where I'm able to get into loans, and the loans are at 6, 7, 8, 9. The highest loan that I ever had on the platform was 12%, right? So what I'm able to do is I'm able to get into the platform, and I'll show you the system that I have, right? I'm able to get onto the platform and put that money to work. So what happens with a syndication is I put $50,000 in. If it has an 8% preferred return, I'm going to receive $333 a month. All right, $50,000 in, right? Every month, I'm going to receive $333.33, right? And at the end, I'll get back that $50,000. I will typically get back at least another $25,000 or $30,000, plus all of the cash flow that I have received on a monthly basis. So that's how we calculate the equity multiple, right? But what happens, what am I going to do with that money that I received, that $333 that I received on a monthly basis? Remember, my thesis is always have the money working, right? So how can you have the money working, right? There's a developer who takes on a real estate project. They need to have financing, right? So they go to an online platform because they don't really want to go to a bank to get the equity that is going to be needed, right? Me as an investor with this guy, I say, well, I want to invest into this particular asset. We give him the money, right? He pays the platform on a monthly basis. We get the money back. Can we put it to work again? So on this system right here, we could always, and every day, if you sign up for Pure Street, every single day, Monday through Friday, they will always have loans that they're pushing out. I get an email at 3 p.m. Eastern every single day. All right. So that's how it works, right? These people come in for first trust position, right? But there's different ways that you can do crowdfunding, right? Pure Street is going to be strictly debt. So by debt is they're going to give you a certain interest rate. They're going to pay an APR against that interest, that equity that you put in, that debt, sorry, that you put in, right? And you're going to get a return. However, if you were to use other platforms such as CrowdStreet or Realty Mogul, etc., they have opportunities for you to get into a preferred equity position or a common equity position, right? There are many different platforms that give you the opportunity to invest in all of these different assets. And one of the first ways that I first started doing this is with realty shares. I invested, $15,000, $20,000 into realty shares. And I only did that because I wanted to get a feel for how all of this worked. And I didn't know any operators, right? So I used that platform so that I can get the PPMs, which is the private placement memorandum, so that I could review those and understand what it was all about. So that is where we're going to go first, right? So here is an example of my account. This is now probably about 2 years old, right? And I blanked out all of the stuff so that you don't think I'm wealthy and try to come and kidnap me. All right, so here on Pure Street, which you see up here, right? You make an investment into the different assets that are there, right? So this was about 1.5 years ago, right? Right now, I can tell you that I have earned on this platform north of $76,000, right? So at that point in time, my annual return was 7.7%. I think many people will take a 7.7% return, right? And my cumulative return, because I have been investing on this platform since 2017, 2018, was 28.6%. Now that's my returns through all of time. Right now, this is north of 50+%, right? Because it's been growing since that time. But the term that you're going to want to understand if you're investing on this platform is something called pari passu. Pari passu, I believe it sounds like it's French, but what it says is everyone is equal, right? In having access to the first trust position. What I like about Pure Street is that if they have to foreclose on this asset, they will do all of it for you. They have the attorneys, they understand the laws, etc. So the difference between me making a hard money loan directly is the fact that I can make a loan for $2,500, right? But if I had to foreclose on that, I would have to lawyer up, pay $500 an hour in order to get my money back, right? On this platform, I can leverage what Pure Street has in place, right? And I have minimal risk in what I've done, right? So on Pure Street, what you will see here is here are the different options that are available to you. You can invest in bridge loans, you can make cash offer loans, you can make 30-day notes, right? But what's critical here is checking this box that allows you to reinvest small balances. So it will take $100 that you have available in your account, and because automated investing is set, right, it will move you into a loan, right? You have the option when it comes to bridge loans or cash offers or 30-day notes of some setting how much of it you want to put here. So as you can see, my strategy here is only to put $2,500 into any loan, right? In addition to that, I'm only going to look at 12-month terms because I'm making loans against people who are flipping, right? They should be done within 12 months, right? I want a maximum LTV for me to strike in at 65% LTV. I can go as high as 70. And this is 70+, right? And then you get to set what the term is going to be, and this is called yield, right? I'm only going to invest automatically in any loan that's offering 8% or more, right? I don't want to come here and do 6s and 7s. I'm in this game for 8% and better. There will be times if I log into the platform and I see that, you know, I have some money that hasn't been striked in, I will go in and invest in something that's 7 or greater, but I stop there. I saw that someone raised their hand. Is there a question?
There are a few questions here, Lee. One question is, let's go back. One question, will we get a copy of the PowerPoint? That's one question. So I tell someone I'm gonna twist your arm to get it. Thank you, Lee, for giving me the PowerPoint. answered it for you. How much was initial investment and what are monthly cash flows?
The monthly, well, this investment right now, I've probably invested on north of 150 loans on this platform. And each one of them are at a different interest rate.
Mhm.
So it's going to be variable, right? And remember, I'll go back here to this last slide. This was when I created this presentation about 2 years ago. It was probably even before COVID that I created this presentation, right?
Okay.
In that time, I have doubled my money on this platform. So it's going to be variable, right? Because I have some loans that are out there at 8%. I have loans that are out there at 7.25, 7.75. So it's going to be different. But what I can tell you is that if the loan is paying, you will get paid monthly on the loan, right?
Okay.
So it's going to be dependent upon the interest rate that you struck in for that loan.
Okay. So Sharon had asked another question. How often do they foreclose?
I would say, well, what I'm going to tell you is this. You have to come up with your own system, right? And the system that I have built is only go in at $2,500 a month, right? They have foreclosed, I would say this thing was really cooking in 2017, 2018, right? There had been no loans that had gone into default, but during the pandemic, there were loans that did go into default, right? I would say probably about 10 of my loans went into default. Probably 5 of them are still out. I haven't lost any money because the asset is still back there by a first trust. So in my experience, I would say about 10 out of about let's say 150 loans, right? And those that did get foreclosed on, Pier Street took advantage of getting those back to me.
Okay. Another question by Persephone. Does the Reinvest act like a drip program for stocks?
Well, it's not stocks because
She knows it's not stocks. She wants
okay.
the question is, does the reinvesting, when you reinvest your money, because you just say that you like to keep your money at work, right? Does the reinvestment act like a drip program for stocks?
I would yes and yes, because it's not going to invest in anything that you are already invested in. Every day, new loans come onto the platform, and if you have money in your cash account, you can get struck in based upon your selection criteria into a new loan. And then that money is going to be working over there at the same time for you. So I hope that does answer the question.
She said, thank you.
All right. Any more?
No more.
All right.
Hold on.
Yeah, I have one. I see the properties are primarily in Europe.
Europe? No, these properties are in the United States that I'm invested in.
Okay, because I looked at the property.
Uh-oh, we lost you.
No, I said I looked at the properties and I'm seeing Canterbury.
My experience is that they have all been in the United States, but you can select with your criteria what you want to go into. Pier Street, of course, they are a going concern, so they're trying to offer these loans in wherever they can, right? But I would say that if there is an option to invest abroad, I think that there's going to just be too many laws and restrictions from investing abroad. So I would say, in my experience, I've only seen them in the United States, but maybe you're seeing something different than what I am.
Now, there's 2 questions from this, and they're really the same question from Daitra and Devora. They want to know, what's the minimum investment required to get started?
$1,000 is the minimum to get in to a loan. And once you are getting cash flows, then it's going to be a minimum of $100. But if you wanted to move into an investment, You see here, minimum investment per loan is 1,000 and it's grayed out, but $1,000 is the minimum there.
And Lee, how do they pay back each month?
Yeah, each month, they usually pay on the 1st and on the 15th. You'll get an email that tells you how much interest you have earned.
Mhm.
You can log in to see how much is in your cash account.
Okay, very
Thank
good.
Answers. Great questions.
I
Great
have
question.
one. I have a question.
Yeah,
All right.
At any time during this process, are you ever familiar with the lender? Excuse me,
Yeah,
the
the ori-
borrower.
you're not going to be in contact with the in loan holder. There's an
Okay,
originator who brings the loan to the platform
that's
and
what
they
okay,
face with the lender, but you'll see with the person who's going to be taking out the loan what their credit score is, how many times they've done this, etc. So you get to see a lot of information. And if you
okay,
are, one caveat that I didn't let you guys know is that if you are struck into a loan, right? If you are
hmm
struck into a loan, you have 24 hours to say, I don't want to participate in that loan,
okay.
right? I have additional secrets of things that I do on the platform. And if you want to learn more about my little secret sauce, I'm not going to give away all my sauce, right? McDonald's never gives away its sauce. At the end, you could text me and I'll tell you about my secret sauce. Laddie's going to share this with the entire world. I don't want everybody out. But let's keep it moving on because I do have some more slides that I want to share with you. I want to be respectful of everyone's time. Thank you for the questions. All right. So the second option, because this is going to the Pure Street is going to give you like, a couple $100 a month, right? Whereas if you were to invest in a syndication, right, as I mentioned, most of the buy-ins are at $50,000, right? And at an 8% preferred return, that's $133.33 per month, right? If you were investing in a syndication and didn't have a vehicle to get that money working for you, you can send that over to Pure Street and put that money to work for you. All right. So how do you know how to invest in a multifamily syndication is the question that I often get, right? So the only way that you can understand and learn how to invest in a multifamily syndication is you have to know how to underwrite, right? Underwriting is basically a complex Excel, usually, right? That's basically going to tell you whether or not if a deal pencils out. And if you are already in the space, you see what I'm showing right now is the Michael Blank syndicated deal analyzer. And what I like about this sheet is the fact that it has options that tell you whether or not if a deal makes sense. Right, so we put this together because we're underwriting at least 2 or 3 deals a week, right? Some of the things that you want to look for if you're going to invest in a multifamily syndication is what is the debt service coverage ratio? The banks will not usually allow for lending that's below 1.25. So in this particular scenario, we have it at 1.55, right? One of the VIP criteria that we have is we never invest in a deal that has a debt service coverage ratio below 1.5, right? So when it comes to AAR, which is the average annual return, which is you take all of the money that's been made over the term and you divide it by the number of years that it's been held, right? It's not one of my driving metrics into whether or not if I move into a deal, but as you can see here, they're looking for an AAR of 17%. However, this deal was only coming in at, I think that's 6.4, right? One of the drivers that I have is IRR. Why? IRR basically takes into account the time value of money, right? Money is corrosive by inflation, right? So this is one of my drivers that I have is the internal rate of return. And that floor is at 15%. This is what Value Investment Partners uses as our floor. As you can see, this deal had 6.5, right? Expenses is something else that you can check. But if you have access to the syndicated deal analyzer, you can basically underwrite every single deal that comes to you, or you can look at their underwriting and be able to check for these metrics to determine whether or not if this is a syndication that you want to invest into, right? You also have the option of moving in as either a limited partner or a general partner, depending upon how much money you're going to be bringing to the deal. So there are options that you have, but I say you have to be in on underwriting so that you can understand whether or not if what they put into the the OM, the offering memorandum, is what they say it is. So when it comes to commercial, it's very difficult for you to sue anyone because guess what? This is for sophisticated and accredited investors, right? So the SEC, et cetera, says that you should know what it is that you're doing. And as you sign onto your subscription agreement, you're basically saying that I'm sophisticated or I'm accredited and I can move into investments such as this. I saw someone raise their hand. Is there a question?
No, there's not a question. Somebody's asking, can I get a copy of the underwriting sheet? And that was Greg Taylor Jr. So how can I get a copy of the underwriting sheet? And Paula Ward wants to know how can she access the deal analyzers?
Well, you can go on to Michael Blank's website. There's also Adventures in CRE. There's a website called Adventures in CRE that basically teaches you how to underwrite. If you are a member of the GOB network, on Sunday from I think 4 p.m. Eastern to 7 p.m. weekly, there's an underwriting session, right? That they go over underwriting in depth in that class, right? I would say it's almost kind of foolish to give someone one of these sheets if they haven't been trained on it, because you're not going to be able to do anything with it, right? So I would say always go and get training on whatever sheet it is that you're going to use so that you know how to use it, right? But for the most part, this is just going to be Excel, and you can build out. If you are a financial whiz and you understand Excel formulas, you can build out your own sheet, right? So I would say just be careful about when you're using the sheet, because guess what? You're going to put $50,000 into a deal. So you want a sheet that actually tells you what you're going to be getting into.
And there's another question. There's a question here. Persephone wants to know, shouldn't the expenses indicated be green? 40% is better than 50%.
This is 50% of your net operating income, right? So typically on a value add or any commercial apartment buildings, your expenses are going to be about 50% of your net operating income, right? So this one is saying that because it's at 40%, it's put in the red flag. If it was 45, it would be yellow. And if it was greater than 50, it would be green, right? But that's something that you want to look at. It's not the lever. As a matter of fact, if I see a property that has too high of expenses, that's actually an opportunity for me, because I think with proper property management and a strong asset manager, we'll be able to go in there and get those expenses reduced. So that's, if I see it like this, this would tell me that there's probably an opportunity, but because it's at 40%, there's probably something that's going to be missing from their expenses, hence the reason why. But all that this is, it's like, you know, red, yellow, green. Go on green, stop on red, slow down on yellow. Look at this just a little bit more so that you can understand what it is.
And I was going to tell Greg Taylor He should talk to you. He said, could you explain IRR a bit more in detail?
IRR, if you just search for, just Google internal rate of return real estate, because there's internal rate of returns for different investments, right? But just do an internal rate of return for real estate, and in Investopedia or something like that will come back to you to tell you what it is. It's too complex of a topic to discuss here. But if you after you do the Google and you run into any issues with it, you can give me a call and we'll walk you through what internal rate of return is and why I rely on it so heavily in any investment that I move into. All right, let's keep moving. We're at 15. All right, so here, this is the Michael Blake syndicated deal analyzer. You have your marketing package, you have your version, right? What you do or don't believe that's here. You have what is projected, right? And projection is when you start saying that you're going to increase the rents and reduce the expenses and all of these different things here, right? And then what are you going to offer, right? This is a very good sheet if you're going into small multifamily, which I believe is the audience here. The reason why we got away from this sheet is because we were starting to move into 100, 150 unit apartment complexes where the renovation schedules would be a lot different, right? But down here, it tells you all of the expenses. And what I like about the Michael Blank sheet is there's something called a 10-minute offer, right? If you can take the NOI and you know the cap rate, it'll tell you what the offer should be and whether or not if you want to spend any time on there. But that's just the continuation of a deal analysis. If you want Michael Blank, Michael Blank, I believe, is like $99, right? And there are ad nauseum many different videos that he has on it that teach you all about this. In addition, if you were to go into the Michael, I'm not advocating for Michael Blank by far, right? But if you go there, there's a Slack channel and you get to ask all of the questions that you have. But as I said, underwriting is the name of this game. If you can't underwrite, you really can't be in this business on the commercial side. All right, let's keep it moving. Okay, we've talked about Pier Street and how to keep money always working. All right, we talked about how you go into a syndication and then use the cash flows from the syndication to invest into Pier Street, right? Some of the time what I do is I'll leave money into something called the pocket on Pier Street where it's earning about 3% interest, right? And I build up my reserves to go back into another syndication, right? But I want to teach you another vehicle that we're bringing to our platform our platform, which is the value investment platform, on how to become your own bank, right? And what we have done, remember, everything that I'm telling you about tonight is something that I have already personally implemented myself, all right? So what we're going to do now is we're going to go into how to become your own bank, and we're going to show you how to do it, right? So I don't know how this happened, right? All I can tell you about is what I have experienced, but whole life insurance has gotten a bad rap, right? It has gotten a totally bad rap because I think people didn't understand how to use it. And you cannot go to just anyone to set up the policy correctly, right? So that you can use the cash value of the property to make an investment, right? So there's different rhymes and reasons and different levers that you have to pull in order to do this, but it takes about 3 years to fund an insurance policy, right? What I will tell you is that insurance policies are written for you to live to be about 100 to 120 years, right? That's how long the policies are written for. What I like about whole life insurance policies that are written through mutual insurance companies is that they pay off a dividend where you can use that dividend to buy more insurance and the policy continues to grow. Now, once the policy has been funded, which is going to be 5 years, 7 years, 10 years, 12 years, or even 20, you don't have to make any more payments onto the policy. It will continue to use the dividends to grow and buy paid up additions, and it will grow into perpetuity until it reaches that 100 or 120 year mark, or the person has died. The reason why I like life insurance policies is because when you cash out the death benefit, there is no tax consequence, right? You cannot be taxed on a death benefit. However, that policy has cash value where you can take a loan out against the cash value, right? And be charged a nominal interest rate. What I like about it is that when you pay yourself, when you pay the loan back, you're paying yourself plus interest, right? So you can utilize the cash value from these policies to make an investment into a syndication, or you can use it for whatever you want. If you understand what an arbitrage is, an arbitrage in very simple terms is if I can take a loan out from my cash value insurance policy at 5%, but I can make a loan for 8%, the arbitrage is the difference, 8 minus 5, which is 3, that comes to me. So now what I have basically shown you here is the fact that you can have money growing in 2 places at the exact same time. If this is of interest to you, I would recommend that you read a book called Becoming Your Own Bank by R. Nelson Nash, or you schedule a call with me because this is something that I'm really bullish about, and we could actually help you to create one of these policies for yourself. All right. So that's the summary of what we have here, right? And my goal tonight wasn't to sell you guys on anything, right? But to share what are the strategies that I have used to build my wealth, right? And, you know, I could tell you, I come from Jersey City, New Jersey, a single mother with 5 siblings. So I didn't come from money. I probably didn't have a spoon. If I did have a spoon, it was going to be a plastic one from McDonald's, is what I tell people, right? But what I just showed you here today is how you can use those stranded 401k monies to take out and create your own self-directed IRA. And what I think is that you should trust yourself. If you're going to make a bet on you, right? Because the mutual fund companies, they're actually stealing money away from you with all of the little fees that they charge you. And those fees have a corrosive effect on your growth potential. So I would say if you have a stranded 401k, create a self-directed IRA, go to put that money to work. One of the ways that I showed you that you can put that money to work is investing in a real estate syndication, right? The other way that I showed you that you can put that money to work was investing in the crowdfunding platforms such as Peer Street, but there are others. The last one that I shared with you, and I have many, many more, but we don't have enough time to tell you all of them, is to create your own private bank. Albert Einstein said that compound interest is the 8th wonder of the world. I believe him. And it's through compound interest that you are able to grow an enormous amount of wealth. It's a flywheel that once it gets started, it's almost impossible to stop. The last thing I would say is teach your children these same philosophies such that as we move from generation to generation to generation, right? When you have access to capital, you have access to power, right? You want to make sure that you are setting up not only yourself in this generation, but the subsequent generations that come behind you as well, right? And last but not least, I wish you happy investing. I wish you all the best. And if you wanted to get in touch with me, let's open it up for questions. On the next slide, I'm a techie, right? You can scan here. This is, if you scan it, it'll come up with my contact information. This is access to my calendar, as well as you can text me, connect if you want, you can text banking to that number so that you can get information on the private bank, right? If you text meetup to me, it'll add you to my CRM and set up a call. There's so many things that we can do, but I think this is the one where I leave it there. So yes, this presentation is there. Laddie, this is already uploaded onto my private Facebook group. It'll be there within the next 1 to 2 weeks, but the presentation as it's evolved over time is also going to be up there as well. So all they have to do is join my private Facebook group and they get access to all of the files for the things that we have shared. And I think I might have about 20 presentations that are out there right now. Are there any questions?
There's one question. Greg Taylor has a question. Greg, go ahead, Greg.
Hey, Lee, first I want to say thank you for putting together this great presentation. I really took in a lot of information and new things that I didn't know about. I did have a question from earlier when you were talking about using a self-directed IRA. So I already have a trust that I have set up, and I use that trust, I guess, in a similar manner. I use that and I hold all like my crypto, stocks, and everything like that in there, and that money just stays there. Would you still recommend I set up a self-directed IRA if I'm already doing, a similar thing in a trust?
Well, the thing about I have one investor who lives in Arizona, right? In Arizona, when they worked with the custodian to set it up, they said that there was some reason why they couldn't set up an LLC in Arizona, so they created him a trust, right? But basically, all we're doing is giving you a vehicle where you can pre-tax money to make some investment. That's what it is. So I don't know if you set up the trust that you have with pre-tax money, or if you set it up with tax money, but depending upon what you have set up, it determines what you're going to be able to do with this, right? So this is just a qualified retirement plan, right? But if you were to go to qualified retirement plan, there are different options that you have. When you go with the EQRP, there's no UDFI, right? And there's no UBIT, right? You could also take out a loan against the QRP up to $50,000, similar to what you can do with your 401k. So there are different options. I couldn't give you advice, one, because I'm not a registered investment advisor, yada, 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 right? But I would say in your particular instance, whoever helped you to set up that trust, they should be able to give you counsel on how it can be used.
Okay, thank you.
My pleasure.
Can you take the screen share down for a second?
Yeah.
Thank you. So first of all, before I go, I don't forget this. So I'm asking everybody, please turn your camera on, right, to show your beautiful faces. There you go. Everybody get their hair right. They always say the hair's right, business is tight. That's right, Robert. I was about to do the same thing.
Yeah, you got it.
Let me get my sideburns down.
Okay.
Paula, why are you laughing, Paula? Why are you laughing, Paula? I was just down in North Carolina. I said, let me get Paula's number. Now she's laughing because I get my sideburns down. Anyway.
Funny.
Maybe Joe, you there, Ranger? Crystal Howell. Anybody here? Christine Shabazz. Oh, Sharon has got camera on. Oh my God. I'm done. Micheline, how you doing? Good to see you. Hey, Micheline, how you doing? Everybody put the cameras on. We're going to take a one for a selfie. Everybody, 1, 2, 3. All right, one more time. I like to take 2 to make sure I got it right. 1, 2, 3. Thank you kindly, everyone. Thank you kindly. Appreciate that. So, Lee, I want to say thank you again for a fantastic presentation.